We just had a big inflection point in Tesla, so should Elon be worried about a crash coming, the stock price going lower? More importantly, should he be worried about the love square between him, Amber Heard, Cara Delevingne, and Bill Gates? What? Oh yeah, we're gonna talk about all of it in this video because these are great questions, AK. Good job. This is the TMZ level content I know you've all been waiting for. But before we get into it, as always, if you want to see more details about how we trade Tesla and every other high-flying tech stock, and not just tech stocks, but any stocks in the NASDAQ, then check out our free training. There's a link in this video and down below in the description and comments. You're going to learn all about the strategy that I use and the members in our Fallible community use too. So check it out. It's free. Now, the big inflection point I was talking about was earnings. And I'll explain why it was an inflection point in a minute. But Tesla actually surprised and they beat estimates. They made 50 cents a share. Look at that, not bad. And with that latest earnings, it looks like they got their index secured because they are likely going to be included into the S&P 500 now. You need a string of positive earning quarters to be able to do that. And that is a big positive for the company because then you get included in the index so that all these indexers, all these passive investors, they're going to be investing straight into your company. So you get that nice constant stream of this decade-long push into passive investing, pushing your stock price up real nicely. At least that's the hope, because the idea is if everyone is just index investing and they're not picking particular stocks as much anymore, then as long as your company is in that index, then you're going to benefit from it. And hopefully it also dampens the volatility a bit because of that constant stream of money. So all in all, this earnings report looked like a good thing, but of course the bears had to jump all over it. And their gripe with the earnings report, which is the same one they always have, is when it comes to those zero emission vehicle credits. So those credits, because the government wants every car company moving to zero emissions, companies are required to earn those credits by building a certain amount of these electric vehicles. And there's a quota that they have to hit each year. But of course, not every single car company is producing enough of those vehicles to get all the credits that they need. But what they can do is buy those credits from other companies. And guess who has a ton of those credits? Tesla. So the thing these bears don't like about Tesla earnings is that so much of their profit comes from selling these credits instead of selling cars. And now in this latest earnings report, they're arguing about how Tesla actually recorded the sale of those credits. They said there was some shady accounting going on because the credits didn't match with the sales, with the timing or something. I'm not going to go into the details because it's boring and it's accounting and all of it can be manipulated anyway, but they're once again accusing Elon of cooking the books, and this time so he could get included in the S&P 500. And you know he has a bunch of bonuses tied to the ongoing profits of the company. We talked about that in a previous video. But obviously Elon doesn't have time to worry about accounting when he's busy dispelling rumors about him and Bill Gates. The rumor that Bill Gates and I are lovers is completely untrue, but sometimes when we touch, it's shocking, I know, but this is what happens when Bill Gates takes shots at Elon. Elon just had to assume that they're love shots. In a recent interview, Bill Gates said, well, Elon's positioning is to maintain a high level of outrageous comments. You know, he's not much involved in vaccines. He makes a great electric car and his rockets work well. So, you know, he's allowed to say these things. I just hope that, you know, he doesn't confuse areas he's not involved in too much. A little rough there with those pot shots, but it does sound like a lover's quarrel. That's why Elon said Billie G is not my lover. And hopefully you know the song reference without me having to sing it. And it's just shocking that Billie G would do all of this after all this touching. How could you touch another man like that and then make comments like you did? Billie G. But then again, what are Elon's options apart from Billie G? There's been some weird rumors swirling about that too, especially with this Johnny Depp Amber Heard divorce. Johnny Depp even said that he wants to cut off Elon's peepadoo. These are court papers, by the way. So Elon rightfully went on record saying he would love to challenge Johnny in a cage match. And this is all over Johnny Depp accusing Elon of having a threesome with Amber Heard and Cara Delevingne. So if you were Elon though and you had to choose, what would you do? Amber Heard? No thanks. Even though dental hygiene is very hot because most diseases start in the mouth, and I'm not just talking about herpes. Cara Delevingne, hard pass. It's illegal to talk to 13-year-old girls. But Billie G, oh yeah, he's looking like he's ready to Control-Alt-Delete the clothes off your body and get busy. I think the choice is very obvious here, Elon. Sadly, Grimes did not happen to be mentioned. Grimes who? Oh, Billie G. So really, when would Elon have time to look at accounting when all this is going on? And we could spend our time diving into the books and trying to separate this from that, but really what matters is how the stock market reacted to those earnings. That's the key part, because like I always say, what is the stock market? It's just a game of supply and supply and demand comes down to psychology. So the most important thing to do is check how price reacted to those earnings. And if you remember in the previous videos about Tesla, we were talking about how it was coiling in a pattern. And whenever compression happens in the stock market like this, that means that a explosion is coming in one direction or another. And a compression or a coiling or whatever you want to call it is just when prices, the range of them, get tighter and tighter. So you can see that I drew this diagonal line because the lows kept getting higher, but the highest highs stayed the same. So you got price working itself into a little corner, and that's the corner of the triangle. And when that compression happens, remember I was talking about it could either break higher or lower. And my bet was that things were going to break higher just because the Tesla fans are so into it. Sentiment is super strong. But as you can see, it did not break higher out of this compression, and instead it broke lower. You see this big fat red candle right here. So just from that, you could at least get short-term bearish. And I also mentioned that when I was more of a discretionary trader, I would wait for prices to break out in one direction or another before taking a position. And in this case, that would have worked out better, because if I wanted to go long and I bought here, I would have been stopped out because it broke the wrong way. So in that sense, if I was discretionary, I would have saved myself some money. Now, like I said, seeing this action would make you at least short-term bearish. But what's even more important that happened here was a breakdown after earnings. And earnings are always an important fundamental event for a stock. So what we had here was a fundamental and technical event kind of combining, and that's what we call an inflection point. So inflection points are telling signs of how the market thinks about a certain asset. So in this case, we had the coil, and then earnings came out, and Tesla surprised, right? Their earnings were actually good, but the stock price still fell. So what gives? Well, that's why I said the earnings themselves don't matter as much as the actual reaction to the earnings, because stock prices move based off investors' expectations. So in this case, it says it's a surprise of 50 cents, right? Because the street thought that Tesla wasn't going to make any money. So you would think, oh, okay, they surprised, so they beat expectations. They did better than all the analysts thought, so the stock price should go up, but it didn't. And that's because the actual analyst forecasts don't matter as much. It always goes back to the market, and it's difficult to tell what the market is thinking and what they're expecting until something happens. So in this case, even though Tesla made that 50 cents, investors were still disappointed. They were expecting more. So if investors' expectations are not met, you're going to see the stock price drop. That's why these absolute numbers don't matter as much. Here's another example. If investors were expecting a stock to report earnings of negative 15 cents, meaning they lost 15 cents, but instead the company reports a 10 cents loss, then you might see that stock price shoot higher. And from an absolute value perspective, you're thinking like, what the heck? This company lost money still. That's a terrible report. And yes, the report might still be terrible, but it's not as bad as investors were thinking. And if that's the case, then investors are going to buy in. So you had a confluence of that important technical pattern right there, plus the fundamentals. With those two events together and the stock price breaking lower, that is for sure a bearish sign. And the thing with crazy high-flying growth stocks is when they're moving higher and higher month after month, to be able to keep that momentum going, the stock has to keep exceeding expectations. The minute they fail to beat those expectations and surprise investors is when that huge upswing turns around, and it can turn around really fast. Now in Tesla's case right here, you could see there's more coiling going on. Look at how tight this price range is right here for the last 3 days. And I'm recording this on Thursday, so we'll see what happens tomorrow. You'll probably watch this Saturday. But when I look at this, and again, this is all very short-term analysis, so there's still a lot of noise in here, but it's looking like investors are still trying to figure out what to do. And Friday is usually a good day where they make their choice. So it could be a good tell whether the thing shoots higher or lower to see whether this bearish inflection point holds. Give you more of a hint if investors are actually done with Tesla. Once again, I'll place a bet saying that they are not. Tesla is too hot, and we got those stimulus checks coming once again. So if they're not going into Bitcoin, they'll go into Tesla at least. And again, this is all analysis I used to do when I was more discretionary, but I moved to a way more systematic strategy, which you'll learn in this training. And I actually did just recently get a great email from one of our Fallible members who uses this strategy as well. So he uses this simplified systematic strategy, but he also builds his own. And right now he's trying to work on some type of short-term option strategy focused on Tesla. And he was telling me about it, and I think he had 8 different indicators that he was using. It was like RSI, 3 different moving averages, Bollinger Bands, all good stuff. And his question was, hey, AK, am I overcomplicating things right here, or am I on the right track? Now, of course, my strategy is more long-term, so I'm never going to try and make those short-term plays. But I told him that yes, you likely are on the right track, but you're at the very first step. And the first step is when you throw a bunch of stuff against the wall to try and see what sticks. But when you do that, you are going to face a lot of complexity. That's why you end up with 8 different indicators or whatever. And then your goal is to go from that complexity back to simplicity. We call it simplicity on the other side of complexity. So when you first start out in investing or with a strategy, you start with pretty much nothing, right? You see a chart, oh, there's some prices, okay. It's very simple. And then you try to put indicators on the chart, and we'll use technical analysis in this example, but the same thing goes for value investing investing or any other strategy. So you build this thing up, and then before you know it, it's pretty complicated. You got all these different dials to look at, and oh, this works when this happens, but doesn't work when this happens, and you're going through it. And then from that point right there, your job becomes simplifying that whole process. Take out what's not working. It's like, oh, this indicator actually doesn't tell me what I need to know. It's mostly just noise. Let's rip that out. This other indicator right here gives me 80% of the result I want. So why am I using these other three? Let's rip them out. So throughout this whole process, you're adding, subtracting, trying to get down to the very essentials of what you need and what are effective. So by the end of it, the process once again looks super simple. But if you showed it to someone else, they'd be like, okay, that's way too simple. How could that possibly work? But at the same time, they didn't see you go through that whole process. And that's really how you build any strategy and honestly do anything in life, any project, business, whatever it is. And it's the same thing we did with this strategy that we teach in the training. I used to spend hours every night looking at the market, and now I can spend 15 minutes a month. That's the type of streamlining you want to do. And you can see how we did it and how we apply it to stocks like Tesla right in this training. Link in this video and down below in the description and comments. Definitely check it out. And if you haven't already, make sure you subscribe so we could talk more about Elon Musk love squares. Do that, and I'll see you in the next video. Stay fallible out there. Bye.